Good morning, Paul Georgie from Allendale. It's July 9th, 2010. Well, to start this morning, we had a USDA report came out here at 7:30 on the supply-demand, the monthly reports, the key factors that everybody was looking at. Did we get a reduction in ending stocks? Did they change the production number on a yield basis from 163.4? Well, first of all, USDA did not change the yield number. They kept it at 163.4. Rich Nelson sent out an advisory here in our office a couple days ago saying USDA is not going to change it, so he's right on. The production or the ending stock numbers changed a little, not quite as much as what trade was thinking, but they did lower the ending stocks in corn, in the old crop, and in the new crop. Not quite again as much as thought. So early calls here, pretty much across the board. When you look at the whole report, neutral to slightly bearish. The corn expected to be 1 to 2 lower, wheat just steady to a little easier, and the soybeans 3 to 5 lower. In the soybeans, the ending stocks, trade was looking for 171 on this old crop number, came in at 175. The average on new crop was 354, came in at 360, so slightly higher. The overall, the supply-demand report was a little on the bearish side, except when you get to the Canadian wheat. They lowered the Canadian wheat by 4 million metric tons, and that could be providing some support here for this U.S. wheat. Then you go to the export sales numbers that we had this morning, and even with the rally that we've seen in this market, we have seen increased export sales. The corn, the trade was looking for 700 to 1150, came in at 825, so neutral there. But on the soybeans, they were looking for 450 to 750. We came in there at 865, so above the range of estimates. Could be a little friendly, and a lot of that export sales were in old crop, so showing that there is some demand out there for soybeans, even with South American in the market or able to export. They still want U.S. soybeans. Wheat exports also were friendly. 300 to 500 was the guess. Came in at 513.6. So overall, we go back to today's trading after a lower opening here. What are the funds going to do? Are they going to be back in here this morning, or are they going to just sit on the sidelines today? Well, I would expect that early we're going to get some profit taking from the big run that we've seen over the last 10 days. I think at that point we'll see what this market's made out of, and if the funds come back in and support this thing. From a fundamental perspective, we would expect to see some profit taking, and also from a hedging standpoint or a marketing standpoint, we're telling producers, take advantage of this rally. Sell some cash, sell some HTAs, sell some futures. Market something here, because the last several days have been certainly a gift in the price of commodities here in the U.S. The weather is another factor, and that is probably the biggest support that we've got here today, and how much fuel and energy can get behind this ridging dome that our weather forecaster is talking about. There's considerable debate yet on how strong this ridge is going to be. It looks like it's going to set in here between the 16th and the 23rd of July, certainly at a time where the corn is maturing, needing some moisture and a little cooler temperatures, which would be ideal. This hot temperatures and drier conditions could cause some stress to the crop, and that's going to be watched very closely, especially for soybeans and for corn. So monitor that very closely. That is going to be our firecracker here going into this weekend, and where we come out of this thing on Sunday night, Monday morning. In the livestock, cash cattle are trading at 91. The choice and select cutout values were lower yesterday, down 101, 103 respectively. The futures this morning, slightly lower. The futures in fed cattle yesterday closed right on the 100-day moving average, above the resistance that we've had here for several days. So looks like that market could take off to the upside if we get a little more strength here today. We expect that setbacks right now will be well supported. In the cattle, or in the hogs, cutout values were sharply higher, up 195 in pork cutout values. Cash markets are a little firmer today. The hot temperatures and hot weather throughout the Midwest here has slowed down growth and movement of hogs, so that has supported the cash market some. Futures have held the support. We're still sitting on that $80 area. If we break that, $78 looks like it's a downside objective on the August contract. However, we can hold that and break out to the upside here. Another $1 or $2 should be easily attained in the August contract, the hogs. So monitor the Allendale research report. You'll get details there, or otherwise just give us a call. We'd be happy to talk to you and answer any questions you might have. We wish you a very successful trading day today, a safe weekend, and we'll talk to you on Monday morning. Thank you.